Alexforbes was recently named Best Investment Survey Provider in Africa at the Africa Global Funds Service Providers Awards for the sixth consecutive year. This recognition reaffirms their commitment to delivering high-quality, comprehensive investment surveys and data solutions that empower clients across Africa with critical insights. It's these insights which I'm keen to explore in more detail. And so I've invited John Anderson, Executive of Solutions and Enablement at Alexforbes, to join me today. Welcome to EVNet Stream, John.
Thank you, Natalie.
Okay, so firstly, congratulations on an incredible legacy of surveys. It really is a commendable achievement. And it's this legacy I'm going to use as our springboard into today's conversation. When I started consulting, what feels like 100 years ago, but more like 30 years ago, surveys were a few pages and a few numbers. Now there seems to be surveys for everything. Perhaps you can start by sharing the evolution of surveys over the years.
Yes, now as you said, it's evolved significantly. So if you go back roughly 30 years, the surveys were quite simple, and it started off with typical balanced managers, and the reason for that was in the industry at the time, what retirement funds were trying to do is just get the best balanced manager, and there were only a few names to choose from. So it was quite simple. And then what happened is specialist mandates became more prominent, where managers would specialize in certain aspects, equities, bonds. These days you've got alternatives like hedge funds, private markets, et cetera, et cetera. So that's really opened up the market. There's also been, in the early days there were a few asset managers that have become quite large managing money. And then at some point, boutique managers started coming out. So today, if I have a look at the surveys, we've got 88 participating asset managers in our surveys, 778 strategies across that, and covering assets of 8.2 trillion. So that's significant. But what it shows you is that the availability of investment options has increased over time. Also, because of the search for alpha, for performance, it's become more complex, and we've had to keep pace with, to assist clients and trustees and advisors with information on those specific aspects as well. So unfortunately, yes, it has become a lot. But I think the importance is that it's one place to get or the first place that you can get credible information as a starting point, rather than having to look for yourself. And it's also been independently, checked, essentially. So I think that still remains the same, but you need to know what you're looking for.
And that leads me into our next question. So I hear you around the investment strategies, investment managers, and products just becoming more and more in both numbers and in complexity. But I'm not going to lie to you, I find the surveys quite intimidating. And if I was a trustee or a management committee representative, what would be the information that I should look for in any survey that I receive?
Yeah, no, look, it's important. So the first thing is, remember, the surveys, it's a collection of information that's useful in one place that should give you, for the majority of asset managers in the country, it should be there. So what you should be looking for, it really depends on what you're trying to solve. So its primary purpose is to benchmark the strategies that you're in to see if managers are performing and the strategies are performing the way they should over different periods of time. That's the primary purpose of that. So let's give you an example. If you were in a specific asset manager, it could be one of the asset managers in one of the large managers, trusted household name for many, many years, a balanced fund. And in your fund, that's your strategy. You want to know, so you've obviously got an investment policy in the fund. You want to know, is my strategy performing as it should? That's the simple thing. What you should then do is go to the right place in the surveys. In this instance, it would be the large manager watch surveys, specifically the global large manager watch. And within that, you'll see the peer universe of those options for your strategy. You can then see where your the manager that you've got, if they're performing in line with benchmark in the short, medium, and long term, in line with what is expected of them, and in accordance with their strategy, in their style. So let's say, for example, you're currently a value manager. So because currently some of the value managers are underperforming at the moment, which is to be expected because it's not a value market. Um, some of them have actually trimmed back on their equities and gone more into cash. And as a result, after the GNU and all of these things and offshore still continuing to perform, they've underperformed, right? Does that mean they're doing poorly? Well, if they're performing in line with your chosen strategy and your philosophy is value, then no. But then you need to also look at it over time. And typically, the right measurement period for a large manager for that kind of strategy is at least 7 years before you can actually say, is it luck or skill, and can they replicate things? So what you would typically do is in your policy, you'll have an inflation plus typically 5% overall objective for your replacement ratios for members. So your first step is to check that, is that manager performing in line with that? That's your primary goal. And then you want to check, well, relative to other options that you could have invested, is it performing, is it one of the better managers? And then you will use, in that large manager watch, there's a risk return diagram, and you can see for the level of risk, are you getting rewarded for return? So you need to go through all of those steps, and those steps are typically documented in your investment policy. You'll say, this is my objective. I want to make sure in the short, medium, and long term, tick. Is the investment style working for what it's doing? And then compare to peer options. And all of that you can get in that one single survey. You should not be looking at the other surveys for this instance. You should only look at that one. So that's an example. If for example, you're in a large fund and you've got a specialist mandate where you are picking managers who specialize in equities, and you want to make sure, for my local equity building block, have I picked, how is my manager doing? And typically you'll have more than one. So you'll have 3 or 4 that are blended together. For those 3 or 4 that you've blended, it would be quite useful for your asset consultant to actually take the information and then to show, have those managers performed in line with what is expected, their benchmarks, and then once they blend it together, that it's doing what they're supposed to. And then also then specifically in the equity manager survey, there's a specific one for that. You only look at that one. Forget about all the others. You only look at that. And that gives you a good relative to all the other options. How are your managers doing? But within you must have a look at, are your value managers performing in line with other value managers? Are your momentum managers performing in line with momentum managers? And that's how you would use it. But invariably, it's probably better to, with your asset consultant, work with the surveys, because it is often complex to navigate, but at least as a trustee, you can ask the right questions, arming yourself, with that information. Then ask your asset consultant, but then you must pick the right one based on your fund's strategy. So yeah, I hope that helps illustrate a few examples here.
I think for me, I was certainly getting the message that this whole survey consideration stems and boils from your investment policy statement. So start there and
Yes.
work forward. Don't don't take the surveys and go, crumbs, should I be setting my policy statement from this?
No,
So
exactly.
look at what your goals are and then measure whether you're achieving that or not.
Exactly.
So definitely gives great insight. Just another question. The surveys that we've been talking about up until now really are based on retirement funds and what we call institutional assets. I mean, where would a retail investor go to kind of find this type of information?
No, it's a fantastic question. So, for close on 30 years, we've been doing the institutional surveys,
Mm,
specifically for retirement funds who need to comply with Regulation 28. What we realized is that there isn't an equivalent in the retail market where you don't invest according to Regulation 28. Um, and there was a need in the market for transparent, credible performance information. So the good news is we've just earlier this year, you might have seen we launched the Alexforbes retail surveys for retail investors. And there's two sets of those. There's ones looking at based on the ACESA categories. So those are, you know, so it's not Regulation 28. It's in line with the Cisco regulations. And with the new ACESA categories, we've aligned it with that. So you can have your high equity funds, medium, low, um,
mm,
but it's specifically with retail managers. Those and that's typically your unit trusts performance, and that's been running now for a couple of months. The good news is that there was good take up by all the different managers, and we'll also be launching a DFM survey because we found that a lot of advisors in the retail market use a discretionary fund manager where they outsource, the decision making on investments to a DFM. But there's no credible place to check, is your DFM performing in line with what you expect? So the DFM surveys will allow advisors who've outsourced to check and compare and make sure that and that the performance is how you expect. Also, those surveys are net of fees, given the retail market, whereas on the institutional side, the surveys are typically gross of before fees. Yeah.
So it was going to be my next question, funny enough, around the fees. Okay, so we know on the retail surveys, we're looking at net of fees, which is kind. On the institutional side, around the fees, it becomes quite difficult for a trustee who may see returns that then keeps them comfortable that their portfolios are meeting their objectives per their IPS. But there could be a whole lot of nefarious fees underlying that.
Yeah.
Is that a reality or a real situation?
No, it is. And, it's a question we often get. The reason we don't include fees in the institutional survey is because the fees are negotiated separately for each fund, and they're quite different. So, and based on their size, they've negotiated different rates. Whereas on the retail side, there's typically a standard fee scale for all investors. So you can actually do the surveys, their net of fees. On the institutional side, it's actually then up to your asset consultant. And if you haven't got an asset consultant, but you've appointed, let's say, a multi-manager, that you must ask them to report performance net of fees. They can use the survey's information, but then they need to make the relevant adjustment on an apples for apples basis on that. But unfortunately, it's not possible. We do provide annual information of the range of fees. So we do survey typically asset managers, and we in our the big publication will show what a range of fees are. But each fund is very different based on their negotiations. So, but you're quite right. There is a whole range of fees that you do need to look at. It's very important to also check if you've got um, you know, often you get components in your investments that are net priced, and often that'll be things like your offshore, or it could be in your hedge funds, and you must just make sure that you understand all of the fees and they're not hidden somewhere. But I think that's where a very good asset consultant can assist.
I think the message is definitely that that trustees must be aware that they're looking at surveys that are published gross of fees, and they're
Yes.
absolutely mandated to ask about fees. And so that's a very important message coming out of our conversation today. I think I'm gonna wrap up with a final question around, so trustees have got all this information from their surveys, so now what? What is their responsibility to communicate, or what should they be communicating to the members of their funds?
Yeah. So actually, there's quite a lot of good guidelines around that. So if you go back to good old PF 130, there are guidelines around what to communicate with members. Um, and also, I think when you look at things like most funds have signed up for CRESA as an example, um, and the PRI, which is the Principles for Responsible Investing, it does, if you by signing up, you do commit to report back to members. So what you need to report back to members is also you need to do it in a simple way that's understandable. So it's what you should just say is, what is my investment strategy? What am I trying to achieve? Did I achieve it? Over what time frames? And just give comfort that the trustees have looked together with their asset consultants at making sure that the funds are performing as necessary. And these days, you also need to start communicating your sustainability credentials. What impact is it having? This whole issue of environmental, social governance, it's a topic for another day, but you need to communicate risk, return, and impact. Um, but it's not necessary to, give the full market survey and all the information. I think that's more for the board to assess performance using benchmarks. All you need to communicate to members is the fund's objective is this, and have the performance performed in line with that, and what steps have the trustees taken to make sure that they've adjusted the strategy, you know, ultimately to make sure that if it hasn't performed, what steps have been taken, or just to provide comfort that it is, and you continue to look at it through, for example, your investment committee. So, but I think there are some good examples of funds out there for very simple communication, but you have to. But don't overcomplicate it with members. Just make it absolutely simple. Is it in line with the fund's objective?
You raised CRESA and the sustainable investing and impact investing. So I'm going to throw an unexpected question at you. It's something that I can't wait to see in our industry. When are we going to get reporting from investment managers or multi-managers that show us, this is the number of schools you built, this is how much electricity you saved, this is how much I don't know how many hospitals or dams you built, in our actual surveys or performance reporting?
No, I think it's an important one that trustees must start asking for. So some funds have started communicating that, but often it's through if you look at your investment managers, they often have the stewardship reports, and it's embedded deep somewhere in there. So some of the reporting is actually happening. It's just there's not awareness of it. So I would encourage trustees to ask the asset managers to, when they're looking at risk and return in your report backs, ask for impact and the ESG. There are now ways to do that. So some managers are actually going a bit further and not just showing, how much, renewable energy is being put in place or housing that's being put in place. They're actually mapping their portfolios to the sustainable development goals and mapping whether it's having a positive or negative impact in the industry, and essentially benchmarking it over time. The good news is that I think our survey team will be producing in the new year sustainability surveys, and hopefully that'll also encourage the right questions, what you should be asking in terms of ESG performance. Um, but I think that the simple answer is start asking the right questions of your managers, and then they can surface that info to you. But long term, it's going to be also a requirement because the FSCA has indicated that sustainability disclosure will be coming in the next 3 to 5 years. Yeah.
Investment returns are arguably the biggest decider of a member's retirement outcomes. Monitoring of this performance is a key responsibility of a trustee and a management committee representative. And it's important to understand the numbers and the information that you are looking at. Thank you, John, for sharing your knowledge and your experience with us today.
Absolute pleasure, and thanks, and good luck to all the trustees and advisors out there.
Thank you.